everyone. Welcome to Midweek with Indiacharts. This is Shilpa Raidas, and we have the senior market analyst of Indiacharts and Strike with us, Mr. Jay Vora. So today we are going to discuss the Nasdaq that has hit all-time high, diverging trends, and the election impact on indices. So Jay, what we have seen is that there is some weakness in the Dow Jones Industrial Average, but Nasdaq has made a new all-time high. And also there has been some diverging moves happening, right? So how should we read this, Jay? And also please tell us your take on the dollar index, gold and silver, Jay.
Yeah, I mean, you're right. So we have seen some diverging moves like, Dow Jones has corrected. In fact, Dow Jones transportation has corrected. But at the same time, if we see Nasdaq, S&P 500, so these are all, pretty much strong. So I think, you can say that even something very similar is happening in the Indian indices as well. I mean, so far we haven't seen Nifty index, which is the major component. Bank Nifty index, which is a major component of the Nifty index, making a new all-time high. I mean, that has not happened so far. But all the other indices are making, all-time highs and they are thriving. So, we are seeing these sort of rotation happening. But, the broader point in this context is that whoever are the strongest ones, okay, as long as we are not seeing reversal over there, you will end up seeing these kind of you will end up seeing these type of rotation happening, because even if we see, say for example, in the Indian indices, I mean Nifty in the last 3-4 days, I mean barring today, Bank Nifty was extremely strong for the last 3-4 days. I mean, it was underperforming for a while, but again after that, Bank Nifty made a very good comeback. And now, again, we have seen some mild underperformance. So that way, we are sort of seeing rotation in all the sectors. And I believe that is what might be going around there as well. So wait, let me share my screen quickly. So see, this is what I was talking about. I mean, when we look at the Nasdaq index, you can see a very nice upward trending chart. Right? If we see S&P 500 index, we have a very similar chart, rising higher. But at the same time, now if I see Dow Jones Industrial Average, that has seen a decent correction from the recent top. And in fact, yesterday it had broken the 40-day average, okay, which is like, in the short term, that is a bit of a concern. In fact, I saw the weekly chart that was at the 20-week average. So now what it does over here is important. But look, the broader point is very similar. Now, this is what I was telling you for the Nifty index as well. I mean, see, Nifty index was rising higher all this while, right? And you could see a very big bar, on 23rd. But when we see the Bank Nifty index, it was doing nothing, and then suddenly out of nowhere, we saw three days of big up move, and from there it nearly rallied almost 2,000 points from the lowest. So the basic idea, what I'm trying to say is that there is rotation that is happening, right? So the point is that S&P 500, which is like a broader index as well over there, I think as long as we are seeing strength in over here, okay, that would be the time to to consider that you can see some sort of rotation over there. Because see, wait, I mean maybe this might be a better representation of that. Like for example, if I mean these are all the screens of Dow indices. So you can see over here, I mean Bank Nifty, I mean the Dow Jones Bank. Then you can see metals and mining, these have been doing extremely well over there, right? So utility was falling for a for a long period of time, but only the recent past you have seen it making a comeback, right? So the broader point again over here, what I'm trying to say is that you will end up seeing rotation happening. Okay, even right now, actually, if we see the Dow Jones Transportation Index, is so this is not performing well. Okay, so somewhere that is affecting the performance of Dow Jones Industrial as well, because here we in Dow Jones Industrial Average we have more of old economy stocks, which sort of represents in Dow Jones transportation. So that is why we are seeing this diverging move. But as I mentioned, like, as long as the stronger ones like S&P 500, as long as that doesn't break on the downside, the idea would be to chase performance, uh, and basically stick to the outperformers, because that is the one that, they are the ones that are performing in the short term. So broadly, this is what I am thinking about of the US indices. And as of now, given that the key indices like S&P 500 and Nasdaq, they are very well above the daily and the weekly averages. So, the divergence over there, I'm not giving too much importance at this point of time. Okay. It's only when something breaks over there in these key indices, like S&P 500 or Nasdaq 100, that's where I will start, being a little more concerned, whether this is going to translate into a bigger correction or no. But until then, I won't read too much into it, and rather the strategy would be probably to stick to the outperformers, right? Now, the whole thing, I mean, we had a discussion last week as well, is revolving around the dollar index. So last week when we spoke, it was very much closer to the 20-week average. Okay, so far what has happened is that we have seen a RMI giving a sell crossover, but so far we are not seeing dollar index closing below the weekly averages, right? So I think, uh, give or take, I mean, let's give us some margin, and let us take the lowest point, which is 104.08. I think once the dollar index breaks and closes below that, that's where then the next leg of down move, even towards the lower end of the channel, will open on the downside, which is say somewhere around 101.4. And that may then, probably fuel the rally in the emerging market, commodities, and so on. Because so far, because of this sideways consolidation, we are seeing some bit of correction in the emerging markets, or you can say a sideways consolidation even in commodities. But broadly, that is how, honestly, I'm thinking about. So, just to be a little more precise, what has happened is that the daily RMI has given a bullish crossover over here, correct? Now, typically, we deal in cycles, which means that if it is above the zero line and it is whipsawing, so at some point of time, we will think that it will come back to the zero line and then give a next signal. That will be more relevant signal. So now, similarly, when it is a bullish, when it is giving a bullish crossover below the zero line, what we would at least expect is that the cycle completes to the zero line and then gives a sell signal. Okay, that will be a lot important sell signal to monitor. So if that has to happen, and if it has to complete the cycle, maybe, worst case scenario, you may end up seeing, something, I mean, a little more deeper pullback, where it breaks above the averages, and only then, when the RMI gives the next sell crossover, that will be the point where, you can expect, like, something like this, a decline where we saw from 106 to 104. So that's where, maybe you might end up seeing the next leg of decline after that. So this is the doubt in my mind that I need to, that we need to figure out. So the main point would be closing above the daily averages. Okay. So, I mean, right now they are both at the same point at somewhere around 104.90. So if that happens on the upside, there can be some room for a pullback. So if I have to draw a channel over here, so, that will lead probably a pullback towards 105.2, 105.25. So that will be the near-term level that I would watch out for. And it is only if the channel breaks on the upside, I would start thinking if there is something changing. But broadly, I think, given that the weekly has given a sell, I think we need to wait for the averages to break on the downside. And once that happens, that will be a signal. And the reason why I am eventually expecting a breakdown is because, we have discussed this in length. See, gold is breaking out of this 10, 15 years kind of range, right? In fact, now silver is also sort of breaking above its previous high. which it had made in 2021, right? And it is, sort of sustaining above that. So this is the weekly chart I'm showing you. So if you do the daily chart, this is the daily chart. So this is the breakout point. So it is consolidating above that. And that is a very good sign. Okay. And more importantly, it is trading above all the averages. So that's where I feel that eventually there will be a pickup that we will see in gold and silver. Okay. I think it is a matter of time. So, whether it does some consolidation over here, I mean, does some time pass over here and then goes up, or immediately that goes up, that is a call that we need to take. So, when I see gold, it feels like that this was a consolidation that was happening, and maybe somewhere over here it could be forming a base. So, this will hold true as long as the 40-day holds. 40-day average, which is the blue line that holds. If the 40-day breaks on a closing basis, then we should sort of be open for a little more deeper correction, maybe till 2270 or something like that. But otherwise, you can expect gold to consolidate over here a bit and then eventually pick up, because we are seeing the cycle complete over here as well. So here, when we get the next bullish signal, that would be interesting. Similarly, when I see for silver, I mean, over here, it is actually trending higher only. So the broader point being, I mean, when I speak of a larger trend, the larger trend for gold and silver is up, which is telling me that most likely the larger trend of the dollar index is probably turning down, because both are inversely correlated, right? Even if we see copper is sort of trying to make an attempt to break past its 2021 high. So far, it is struggling over here. Now over here, again, the call is that whether we get a pullback towards the 40-day exponential average, and only then we pick up, where we might see the cycle completion, or it will continue to move higher from here. So that is the only doubt. But I think there is one more leg still pending in silver, because when we take the up move from this low, so this is a 5-wave rise, this is 1, this is 2, this is 1, 2, this entire thing is 3, like 1, 2, 3, 4, and within 5 we have 1, 2, 3, 4, 5. Then over here as well, we have a clean 5-wave rise. So if we see, each of the legs have impulse move over there, and if we do the wave count in that case, either wave 4 is done over here, and very similar to gold, it could be forming some base over here and only then rising higher. So broadly, I think even in commodities, it looks like that the rally is not done, right? So maybe some pullback here and there can happen, but broadly they should be inching higher. And if that is the case, then I would expect that dollar index should eventually break on the downside, and that should broadly lead to a positive momentum in the equity market, especially in the rest of the world. So in India, we have some election, and that is like an event for us. But if all things being normal over there as well, then I think we should see the bullish trend continuing in the near future.
Interesting. Thanks for that, Jay. Coming to the events of last week with the Nifty, what we have seen is that the Nifty index has made a new all-time high last week, but now from there it has cooled off a bit, right? So how is the setup ahead of the election? And also, what about the other key indices, Jay? Also, can you please tell us, many of the sentiment indicators were in the oversold conditions when
Right.
we reviewed them last time, right? What's the update right now, Jay?
Yeah. So one important development in Nifty index, what has happened is that when we draw this trend line, as I've drawn over here, the blue line. So Nifty exactly touched over there, and from there we have seen a bit of a cooling off. Now, honestly, today's closing below the short-term breakout level is slightly disappointing, but it doesn't change the overall picture, I would believe, because like you mentioned that last time we had reviewed this sentiment indicators. So at that point of time, FIIs were short, okay, and in the matter of 4 or 5 days, their entire short position was cut, And in fact, they went long to the tune of around 47,000 contract as on yesterday. Okay, so today's data is not updated, but as on yesterday, they were net long by 47,000 contracts. Just to understand the magnitude of that, uh, you know, if we see the day on day data and the change. So this is like, on 22nd, they were net short to the tune of almost around 219,000 contracts. And in a matter of 4 days, the entire shorts was wiped out. And this you can see in day on day change. There was 120,000 contract long, 82,000 contract long, 37, 25. So, that way in last 4 days, they have formed significant long position. Now, typically, people who have been following us, they know that their positioning usually goes from one extreme to the other, right? So this time around, the positioning was extreme short. So we are expecting that eventually their positioning will head higher to say 120,000 or 180,000 mark. And maybe that should lead to the positive momentum continuing in the near term. Even if we see the client position, usually they are maximum long at the bottom, and they have done so. And sort of, I think what we are seeing right now is that as we are coming closer to the election, those extreme positionings are getting taken out from the system. So more or less people are neutral. Like there was a point where clients were long to the tune of almost around 280,000 contract in the index. From there, they have unwinded significantly and they have come to 45,000 plus contracts, right? So we are sort of seeing people cooling off or tapering down their position ahead of the election, because many anticipate that there can be a huge movement can come if there is an upset or if there is an unexpected result, right? So now, even if we gauge the market internals over there, so the put call ratio, which was actually dropping. So in the past 1 or 2 weeks, it has started to improve. Now that kind of shows that people are more confident shorting put, and that has sort of led to the up move in the Nifty index as well. So mind you, this is a 9-day average, so it might lag a bit, right? But broadly, what it tells you is that people were so far confident shorting put. Now even this has not gone to extreme over there. Okay, it is somewhere in the middle. So when we look at all the sentiment indicators, in fact, breadth, I mean, this has been slightly disappointing, because in this up move, the breadth did not pick up that well. And in fact, in the past 2-3 days, it has been declining. So that is sort of a little disappointing. But I think broadly, when I look at the entire structure, so say for the Nifty index, if we look at slightly higher time frame, so over here, the 20-week average has been holding, okay, and that what matters the most in the near term. So I think if this has to hold on, then the up move can continue, right? If the 20-week breaks, then there is a bit of a problem from a positional perspective, right? So that is how we are thinking about it, and like I mentioned, that the positioning of the sentiment, usually it goes from one extreme to the other extreme, right? So I think the next actionable point for us, okay, would be when say the FIs or client or anyone, they either reach this part or this part. Okay, that means whether they are net long, where they are very much net long, or where they are very much net short. So that is the point where we will take action. More or less now it is neutral. Even in the Nifty index, if we see there is an up move and then there is this cooling off. So in the near term, specifically for the Nifty index, the daily averages, which are say somewhere around 22,400 or so. So 22,482 precisely is the 20-day average. 40-day average is at 22,444. So these are two very important levels in the near term. I think if that holds, then we'll eventually end up seeing the up move continuing. And I would suspect that a major up move will come once we break this upward slanting range. Because so far what has happened is that there was a runaway rally that we saw due to state election where BJP did extremely well, and after that, this has been more of a time-wise consolidation, but which has been rising higher. So I think the next leg of up move will come once we get out of this consolidation, right? That is where I think we will end up getting the next leg of move. So that is how we are looking at things. The most important then would be to break above this 23,200 mark. So right now, what we are seeing is a bit of a cooling off, but that's about it. I mean, we are not reading too much into this as of now, because as long as we are above the daily averages and the weekly averages, okay, which is the 20-week average, we are okay. I mean, there will be some pullbacks and people will have some nervousness ahead of the election, but I think that's about it. We may not read too much into it. Bank Nifty is the one, which has still not made a new all-time high. So, I mean, like I mentioned at the start, Bank Nifty ka high was somewhere around 49,974. We have still not made a new high. So over there, actually the new high is still pending. So say, for example, Nifty break the averages, Nifty breaks the 20-week average, and we don't end up seeing, this negative divergence, I mean, which we are seeing right now, where Bank Nifty has not made a new high. If that doesn't resolve, then it will be a bit concerning. But I think when we look at the entire internals, we feel that eventually we should see a pickup of momentum, in the days to come. Broadly, we might see this just as a minor degree correction, and we should be seeing, pickup broad based in the market, because I mean, this what I showed you is Bank Nifty where it has not made a new high. But if you see the small cap index, it has made a new high, and right now it is consolidating towards the upper end of the range. There are some variations. If we see the mid cap index, it has been inching higher. If we see the Nifty 500 index, that has been inching higher, right? So now see, I mean, like I told you, there can be rotation that can happen. So, if I have to, logically think, if we see the IT index that is down like 10-15% or so from the top, right? If we see Bank Nifty, and within that also, I mean, many people would know that the top banks, they are down by around 20% or so. I mean, 10 to 20%, depending on which stock are we talking about. So I think when we have these sort of corrections that have already happened in the frontline stocks, what we will end up seeing is more of a sideways or a time-wise correction. And eventually, once they pick up, that's where I think the trend on the upside will pick up as well, right? So that's where I don't see a scope of a major correction as such. So yeah, I mean, if in the result there is some surprise outcome or surprise element that we end up seeing, I mean, that is a different question then altogether. But I think if all things being equal, I would expect that at least from a medium term perspective, this 20-week average to hold, and eventually Nifty trying to break out of this range and rising higher. And I think all this may accompany when we see the dollar index eventually breaking this trend line, I mean breaking this average, because that is what will sort of fuel the rally almost everywhere, and we may end up seeing those broad based rally in emerging markets, developed markets, commodities, equities, and so on. So yeah, I mean, broadly, that is how we are thinking about it. And, this is ahead of the election. I think there is some wait and watch mode by major market participants. But I think once the election result is through, and most likely the expectation is that, BJP will once again come into power. So if that happens, and I think there is speculation that, I mean, not speculation, but the market rumors are that, BJP will come on its own only. Like they will get the majority and they will pass that 280 sort of mark on their own. And if that happens, market will sort of view it very positively. And whatever halt we have seen in the near term, like in the past 3-4 days, or whatever correction that we might see, I think that may end up reversing, and the positioning which is from one extreme, that may end up going to the other extreme. So we have like we had discussed previously, that FI is positioning, or the market participant positioning, or the sentiment data, they usually go from one extreme to the other extreme. That is
Right.
what I think will happen this time around. And we will eventually see the positioning going to the other extreme. And once it happens, I mean, that part plays out, that will be the point where we will think, whether a major top is done or no. So yeah, I mean, broadly, that is how we are thinking about it. Right now, we are sort of in a neutral zone.
Right.
Once the election plays out, we will see how this sentiment data points are playing out. And the bias obviously would be on the upside. And eventually, we would look out for a dollar breakdown.
Wonderful. Thank you very much for the analysis, Jay. We were looking forward to it, and we have got things in a much more clearer perspective now. For those of you who haven't tried Strike as yet, I'm going to leave a link down on the description to get a 7 days free trial. So sign up right away. Also, do follow us on Twitter, follow us on YouTube, and follow Indiacharts on YouTube as well. Jay, I would like to tell our viewers about the webinar you're holding this Saturday. So this Saturday on 1st of June at 10 a.m. in the morning, we have a very interesting webinar hosted by Jay himself. It is about rollover analysis. So you pretty much get to know about, this webinar especially is going to help you find the best setups for the next series using rollover data. It's going to be very interesting. The link is going to be on the description as well. We have limited seats, so book your seats right away, and we will see you there on Saturday. Thank you, Jay, once again for your analysis, for your time, and I shall see you, and we shall see you all next week at midweek with Indiacharts. Take care, everyone. Thank you.